Welcome to the LIPN podcast, brought to you by the members of the Long Island Professional Network, where business professionals come to grow. Thanks for joining us today. I'm Meryl Lochner, founder and commercial podcast producer with Smith Douglas Podcast Productions. We should all know how important it is to have good credit. But amazingly enough, many of us still believe a wide variety of misinformation when it comes to our credit reports. So I reached out through the Long Island Professional Network to Angela Kim, a credit consultant with Credit Repair Boss. She spoke about the 5 major inaccuracies that most people have about their credit reports, including one that shocked me and made me realize that maybe my report wasn't as secure as I thought. Let's find out more. Today we are talking with Angela Kim from Credit Repair Boss on some of the myths people still believe about their credit report.
Thank you for having me again.
Yes, we have done another one with her, and I will put the link in the show notes. The credit is so important nowadays, especially when you're looking to buy a home, got a car, business loan. There's so many reasons you need good credit. But there's so many myths out there too that people still believe even after 10, 20 years going, oh yeah, no, I'm fine. I don't need to worry about it.
There are a lot of different information out there in this world, especially on social media. I think a lot of people are absorbing information when it comes to credit, not necessarily through sources that are credible. So I see a lot of information gathered through Instagram, even TikTok, and there's a lot of wrong information out there.
I'm sure you look at hundreds, if not thousands, of credit reports every week, every month. And I'm sure you talk to a lot of startled, angry, and confused people on a regular basis. So starting with one, what's one of the number one myths that people are surprised about when it comes to their credit report?
Yes, I do read hundreds and thousands of credit reports every single week. I think one of the biggest myths is that there is no perfect credit report with zero inaccuracies.
How does that happen? Because usually when I think of my credit report, it's just showing up, well, I had this mortgage, I paid this off, I had this car loan. Where are the inaccuracies coming from?
The inaccuracies are coming from many different reasons. So studies show that actually 1 in 5 credit reports contain errors, whether it's balances on your old accounts or balances on your collections that you have owed to Verizon, for example, or even containing a lot of different addresses or informations that don't belong to you.
I had that happen to me once. I had moved, and for whatever reason, one of my creditors had the new street address but kept the old town and state.
Wow.
So that just caused havoc until we were finally able to get that right. So one of the problems on a credit report may be you paid off your car, but for whatever reason, the payment was never updated onto your credit report, so it's being shown as a debt.
All the time, yes. A lot of the times, it's your debt that you've owed with a bank that you never paid, and that amount that you owed might be completely different than what it's supposed to be. And a lot of the times there are identity theft accounts that has no association with you, that's completely inaccurate to your own credit report sitting on there. So there are many different errors where it could even be addresses that are completely incorrect, where it opened up a loophole for a lot of different information to get added onto your report. A lot of different inaccuracies could be on your credit report just because you're not checking it in the right way and you're not regularly viewing your credit report and disputing those inaccuracies.
So I'm assuming that's relatively easy to fix. That if you look at your credit report and go, wait a minute, I paid that off 6 years ago. What's that still doing on there? Hopefully that's relatively easy for a regular person to fix and definitely easy for a professional like you to fix.
Unfortunately, very difficult for a consumer to take care of that. A lot of the times,
Really?
yeah, it's actually quite challenging. A client of mine had an account that's not even his, that's reporting on his credit report years and years. Every time he would call the creditor and also reach out to the credit bureaus directly, they would validate that the debt is his. So believe it or not, it's very hard.
Okay, you mentioned identity theft. I'm sure that's a really big one and another reason to check your credit report on a regular basis.
Absolutely. No one is safe. No one is completely safe from identity theft. Even if you never share personal information recklessly, you never even lost your wallet, data breaches can happen. Not because of your fault. It could be your medical care provider who got breached, or it could even be your employer, which we've seen a lot. Even credit bureaus who are supposed to safely hold all your social security, all your information, their data breach could affect you, and scammers are also always finding new ways to steal identities.
Oh yeah, I remember when Experian got hacked. That was unnerving. I mean,
And a
that's
lot of
that's
my
that's one
friends.
of the big three when it comes to your credit report, and to have them hacked. Hi. So, how do you deal when a client comes to you and is shocked to discover their identity's been hacked? How can you help them fix that?
We could undo a lot of the damage that are done. Just to give you an example, I had at least 5 clients within this month where they never lost their wallet, but the scammer hacked into their iPhone and actually stole information from iCloud, which opened a floodgate of all these fraudulent information on their credit report. If you are victims of identity theft, we can not only prevent any future problems that could occur, but most importantly, we want to fix up hundreds and $1,000s of damages that occurred on your report. We could fix all of that. Probably there are a lot of things that need to be undone, and we can also prevent that from ever happening again.
Excellent. I can see that. I remember I referred you to one of my mom's elderly friends who was going, "What? There's this weird thing on my bank statement. I don't know what I'm looking at." And I'm thinking, that sounds like identity theft. Let me send you over to Angela. And sure enough, she had some problems with her credit report as well.
Yeah, unfortunately, seniors are very exposed to scams because they can get a lot of texts and phone calls and that they're not aware of. They could even give information that could open up a lot of different fraudulent activities as well. But in that referral that you mentioned, there were a lot of inquiries that did not belong to the client, and we were able to get all of the inquiries as well as open accounts rectified off of the credit report as if identity theft has never happened. But the most important thing is prevention, making sure this will never happen again. So I really believe in prevention as well as remediating all the issues that already took place on the credit report.
Now, how do you recognize looking at a credit report that something is suspicious? I mean, if I look at my own credit report, maybe I could see something, but as a professional, how can you scan it and go, that doesn't look right?
So there are patterns, right, in life, and also we see patterns when we read someone's credit report. Basically, a credit report contains 7 years financial activity in your life that involves credit. I could see who you worked for in the last 7 years, where you've resided before, your spending habits, whether you've been paying payments in full or just doing minimum payments. So we could tell a lot about an individual. And I see an individual who has average credit limits of $20,000, $30,000, and you bank with only major banks, and all of a sudden you went to Kohl's to open a credit card with Capital One, something's odd. So we could really read someone's credit report and see that something's very off based on the trend of the credit history, and we could pick that up pretty easily.
What are some things people can do to, I don't know if you completely stop identity theft, but at least make it a lot harder for the scammers to steal your
Absolutely.
ID?
I would highly advise everyone to have fraud alerts on credit reports. And if you don't have any intention of using credit for a long time, for example, if you're not looking to get any kind of business credit card or in the market to purchase a new car, maybe having a security freeze on the credit report could be also important. But there are ways where even your security freeze, where your report is completely frozen, could be uplifted because scammers know what they're doing. But having those security measures could be very helpful in order to prevent it. But there's a second measure you could take to double seal your credit report.
Nice, because I did not know that, because my credit report has been frozen now for almost a decade. And I'm like, yeah, I don't have to worry about my credit report. It's frozen. No one can get to it. Good to know. We may need to be setting up a meeting sometime soon.
Absolutely. We had a client who was exposed to identity theft last year in 2024. And the client got a notification saying that your experience security freeze lifted
Hmm.
overnight. And there were 5 new accounts that opened overnight.
Hmm.
So believe it or not, scammers can uplift your existing freezes or alerts. So
Hmm.
you have to have a second measure to protect you from any of those things potentially happening. They're getting smarter and smarter. You have to outsmart them.
Absolutely. And I talk to some people and they're just like, screw all this credit stuff. I'm just chopping up all my credit cards. I'm living by cash. I don't need a credit report. Cash is king. We're just going to deal with cash.
Cash was king, but no longer currently king. And I'll give you an example. I had a client last week who came in from a loan officer and looking to get a mortgage. They're buying a very nice property for $1 million, but they were putting 50% down, which is 500,000. It's a lot of money. But where are you going to come up with the difference of the 500,000 plus closing costs to purchase this $1 million property? That's where your credit comes in. So a lot of the times, while cash is great for avoiding debt, we
Hmm.
don't like debt, right? Unless it's a healthy debt where you're leveraging credit, it does nothing for your credit history. So believe it or not, money in the bank, whether it's checking account, savings account, you name it, has nothing to do with credit. So although cash is crucial, you want to have credit so that you could tap into a lot of different opportunities and leverage it for your business or for your personal use.
Hmm. And so, yeah, I could understand why people who have a propensity for abusing their credit cards may want to work with something else, either a lower credit and slowly build up. It's like a teenager. It's the you get the my first credit card when you're a college student and the only use it in emergency. And you'd be amazed what an 18-year-old can think of an emergency is.
Right. That's why education is key, understanding what credit is and how it could affect your life.
Hmm.
And just like that example you gave, a lot of the times, kids' exposure to first credit is college orientation. That shouldn't be it, right? You shouldn't be lured into opening a credit card with a certain bank just because they're giving you a $50 gift voucher. That's people's exposure to credit. So cash is awesome, but you need credit to help you finance bigger things in life. And there's limit as to what you could afford. So really, if you understand how credit works, there's a lot more opportunities you could leverage. And it's really important to have good credit score. And even employers are very concerned about your credit.
One of the things we were also talking about is, okay, well, yeah, I've got some loans. I know. I'll up my credit score by applying for more credit.
That happens a lot. Many think that getting a new credit card or like a personal loan or even
Hmm.
auto loan will boost their credit score. Actually, a client called me today saying, my daughter is 22. I want her to build credit. So, can I get a car under her name? And I asked, how much is the car? And he said, it's $80,000. She is very young and she only has $1,000 secure credit card under her name. Getting an $80,000 auto loan under her name is not going to build her credit because you're adding that much debt on there. Maybe if you're trying to help her get like I don't know, like a used car with very little balance that could potentially help her, that could be better, but not beneficial for someone with no credit. By getting new loan is going to help. But again, every case is case by case, but just getting one of those retail credit card because they're giving you a discount is
Hmm.
not going to be the best way for you to build credit. It's
So
better.
getting a Macy's card is not really going to be building credit as opposed to getting a Visa or MasterCard.
Right. So a lot of the times, Macy's right now, they service their credit cards through Amex at the moment. It
Hmm.
used to be Citi. It depends on whether you're shopping at Macy's or Bloomingdale's. They technically belong to the same organization.
Hmm.
So a lot of the times they get you with the
Hmm.
extra 20 or 30%. But guess what? If you have good credit, you could use your American Express or your Chase credit card while you shop at Macy's and
Hmm.
still have that relationship and build it. Things are relational. So
Hmm.
instead of opening all the credit cards at major retailers that you shop with, it's going to be better to have a very strong and healthy relationship with existing banks that you already have relationships with.
That makes sense because you can't go to Macy's asking for a loan.
Right.
No, absolutely. And a lot of people understand that, their credit report is important. And that's why all the banks saying free credit report with your thing, or hey, go to this and it's a free credit report. This will give you your credit score number. Not all credit reports are created equal, are they?
Absolutely. The most asked question is my credit score on Credit Karma is 700. What
Hmm.
can you do to help? Well, Credit Karma is not an accurate reflection of your credit report because there are three credit bureaus. There's Experian, TransUnion, and Equifax. When you go to apply for a mortgage, score you see on Credit Karma is not what you're going to get because it's FICO credit score is what the banks are looking for. Vantage is at oftentimes what's given by Credit Karma or a lot of other banking apps that's giving you that number score. And they don't give you Experian. So you're looking at a very nice report card, but you're not understanding what your grade is on the most AP class you need in order to get into college. So you do need to see all three. So it's kind
Hmm.
of a teaser where it gives you an understanding, but not the most accurate way to judge your credit.
No, absolutely. It's like stepping on a scale that doesn't have way accurate, like, hey, I'm only 100 pounds. I'm like, no, no, you're not. It's like, but that's what
Exactly.
this one scale said. Yeah, it's a credit score. It's not an accurate credit score, and it's not the one the banks are using to decide your interest rates.
Exactly. And there's a horror story I would love to share. A
Please.
client really believed in Credit Karma.
Hmm.
And when the client came to us wanting to better his credit for mortgage purposes, he was shocked to find out on Experian, which is not showing on Credit Karma, that there was a $80,000 car that he let go during COVID that was never showing on Credit Karma. So a lot of the times when your car gets repoed, they auction the car and you owe the difference. And on that $80,000 loan he borrowed, he still owed 48,000. So that really was a setback for a particular client, which we definitely rectified and cleaned it off the credit report. But yes, you have to really understand the full picture of it. And I love that example you just gave. It's like reading a report card. Okay, great. You got a 4.0, but wait, did you take only easy classes? Did you really excel in that AP class to get you into Harvard? So,
Hmm. Yeah, it's just like, oh, I got all A's in gym, in home ec, and it's like, so I want a scholarship to, become a biophysicist. No, absolutely. It's you have to look at the same scale because you're thinking, oh, my ace in my credit, and the banks are going, maybe not.
it's all about credit worthiness. I tell clients it's a gauge. The score is a gauge going to get you from point A to B. But do you have credit? Do you have credit worthiness? My credit score of 820 is not going to be the same as your credit score 820 because probably have $80,000 worth of available line of credit. If your 780 only means $7,000 total worth of credit and $150,000 in other consumer debt,
Hmm.
probably that credit worthiness is not the same. So it's really about what's on your credit and your credit worthiness that's going to get you everything that you're looking for.
Yeah, and pretty much a credit report is just telling anyone who's checking on it, it's like, does this person pay back their loans? If I loan money to this person, there is a good chance that they're going to pay me back, as
Exactly.
opposed to they look at a credit report and says default, 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 default. That's going to be a big red flag.
Absolutely. That's the reason why landlords study and dissect your credit report. Are you going to pay rent on time? Especially in a state like New York, eviction process is very difficult. So a lot of the times landlords ask us and management companies ask us, can you review this credit report and give us a report and analysis on the likelihood to pay the rent on time? Same thing for employers. The reason why they read your credit report is your financial habit can potentially determine your productivity and your performance at work, and even for insurance, believe it or not. For your auto insurance or home insurance, whether you have it bundled or not, if your credit is below a certain point, they do a soft pull where your credit score is not impacted. I've seen cases where clients were not able to onboard with a new insurance company, not because of driving record, just because of credit. So
Hmm.
credit is a detrimental part in a lot of different aspects in life, and people are shocked to hear it.
Yeah, that's why it's so important to build credit, like we were talking about with cash before, or kids. It's yeah, you don't have to live off credit cards. It's a paper trail proving that you keep your word. And it's not just I have a credit report, therefore I can get a mortgage or I can get a car loan. It's I can get insurance, I can get a job, I can rent an apartment. There's so many things that people check credit reports for.
Absolutely. Responsible credit usage is key, for sure.
No, absolutely. Well, if someone has questions about anything we were talking about, how can they reach out to you?
The best way to reach me is by calling 516-698-4303. I am one of the founding members at Credit Repair Boss. We are a very reputable firm in the credit consulting world, and you could also reach me via email, angela@creditrepairboss.com.
Excellent. And I'm assuming people outside of New York State can call you? Do
Absolutely.
you work with anyone else in the country?
We do. I'm glad and proud to say that we service clients all over all 50 states, and we're able to help you regardless of where you reside. Credit is still heavily utilized in all the 50 states in America. So if you need help with credit, whether you have social security number or you may have just EIN number, regardless of that, we can help you with repairing credit and also restoring credit. It's all about fixing the problem, but getting you to a point where your credit is usable for you to get approved and getting yeses on whatever financing that you're looking for.
Excellent. And you work with both personal credit and business credit?
Absolutely. So we help individuals and businesses with their personal and their business credit. So I always say it's like building a house. If you have a cape, you only got the first floor, that's your personal credit. So if your personal credit is wavering, it doesn't have the good foundation, and there are certain areas that has to be rectified, you probably can't build a 4,000 square feet above 1,000 square feet first floor. So if you have an end goal to work on business credit, we would love to examine your personal credit first in order to make sure your personal credit is perfect and we can build upon it, which is business credit.
Wonderful. Thank you so much. This was really valuable. And like I said, I think I may need to set up a time to talk with you because I'm blithely thinking just because my credit's been frozen for a decade means I didn't have to look at it.
You should still
Something to
double check.
know.
We would love to offer free consultation to everyone. I always say when it comes to working on credit, it's like going to a doctor's office for a visit. You first need to know what illness you have. You need a diagnosis. Only after understanding what it is that you have, you could then be put on a treatment plan that's going to heal you. There's no pill that solves it all, right? So we offer free consultation, able to assist clients all over 50 states. As long as we have your credit report, all three bureau report, we can give you guidance on how long it's going to take to fix credit, the costs involved, and the end result. And we believe that credit is well.
Wonderful. Thank you so much.
Thank you for having me again.
Thank you for listening to the LIPN podcast, brought to you by the Long Island Professional Network and produced by Smith Douglas Podcast Productions. To learn more about the LIPN, visit our website at lipn.org or join our meetup under Long Island Professional Network.